Here's the question for you. Would you rather keep an extra $1,500 in your pocket or hand it over to the IRS? Because starting in 2025, thanks to the big beautiful tax bill, the standard deduction just got a massive upgrade. And this one change could completely flip how millions of Americans file their taxes. In this video, I'm breaking down exactly what the new standard deduction is, who benefits the most, and some planning tricks you can start using right now to make sure you don't leave money on the table. Hi everyone, my name is Mia. I'm an enrolled agent, which basically means that I'm licensed to represent taxpayer in front of the IRS. My job is to help people like you save money, avoid mistakes, and actually feel confident about tax season. If you are tired of confusing tax jargon, you are in the right place, because I'm going to explain this in plain English with real numbers and real strategies. Let's get to the heart of our video today. What the standard deduction is. So let's start simple. What exactly is the standard deduction? Basically, the chunk of your income that the IRS say, okay, you don't have to pay tax on that part. Instead of saving every receipt and adding up deductions, you can just take that flat amount. Now, here where it gets interesting. In 2024, the standard deduction was about $14,600 for single, $29,200 for a married couple filing jointly. But in 2025, boom, it jumped to about $18,000 for singles and $36,000 for married couple. That is a $3,400 boost for a single and nearly $7,000 for a couple. And in real dollars for a couple in 2022 tax bracket, that saving reduction could save you roughly $1,500 in taxes. Not bad, right? Literally for doing nothing extra. So now your standard deduction is higher. That eliminate a lot of the risk in terms of doing itemized deduction. So who benefit the most? Okay, so who is this really helping? So if you rent and don't have a ton of deductions, you almost certainly going to take this standard deduction. This is just making it even better for you, right? If you are a homeowner, maybe you've been itemized your mortgage interest, property taxes, or charitable donations. But with this bigger standard deduction, a lot of folks are going to find out it's no longer makes sense to itemize. So here's a quick strategy. If your itemized deduction are close to the standard deduction line, consider bunching. That means you group certain expenses, like making 2 years worth of charitable donation in one tax year. This way, 1 year you itemize, the next year you take the standard deduction. So it's a simple trick, but it can unlock deductions people usually miss. So now let's talk filing status. Married filing jointly get you the full $36,000 deduction. Married filing separately, you only get half, so that's about $18,000 each. But here's the catch. If one spouse earns way more than the other, it's worth at least running the number both ways. You might be surprised which one saves you more overall. And don't forget about heads of household. If you are a single parent supporting a child, your deduction is bigger than a singles filer. So that extra tax-free income right off the top. Now let's get to the next section that I want to talk to you about, some planning tips. So what should you actually do with this information? First, you want to update your paycheck withholding for 2025 and 2026. That way you get more money in your paycheck now instead of waiting for a refund. Second, you might think about the timing. Right? So if you are planning big medical expenses, home upgrade, or donations, so bunching them together in 1 year might get you over the line to itemize. So think about it, right? So if you are gonna do all of that renovation that you know gonna spending in 2025 and 2026, so you might decide that you want to do all of that work in 2025. So pay everything up front, get all that stuff done, or you can delay that and wait until 2026 to get everything and to itemize for 2026. So saving your 2025 for standard deduction. So third, don't forget that your state might play by different rules. Some states might use the federal standard deduction, which means you might still itemize at the state level while taking the standard on your federal return. If you want help figure out where you should take the standard deduction or itemize, I have created some simple calculator and templates you can grab on my Pro Deductions Etsy shop. They make the math easy and save you a ton of time. Now I want to hear from you. Do you usually take the standard deduction or do you itemize? So drop standard or itemize in the comment so I can see how this new change is affecting people. Plus, it helps more folks find the video, so let's get the conversation going.